Welcome to The Explainer, where we turn dense documents into clear stories. Sometimes the most interesting narratives aren't in novels. They're actually hidden in plain sight, tucked away inside spreadsheets and financial reports.
Today, we're putting on our detective hats. Our case file, it's the 2025 annual report for a fund called the Amova SGD investment-grade corporate bond ETF. Yeah, it sounds a little complicated, but our mission is simple. We're going to follow the money, connect the dots, and uncover the story of the year this fund just had.
All right, so before we really start digging for clues, we need to understand our subject. What exactly is this thing? Getting a handle on this is going to be key to cracking the rest of the case.
Okay, let's break this down into plain English. First off, it's an ETF. That just means it's a fund you can buy and sell on a stock exchange. Super simple. Its whole job is to copy or track a specific list of high-quality corporate bonds. Think of these as loans to really stable, reliable companies. And they're all priced in Singapore dollars. So basically, this fund is like a single shopping basket that gives you a piece of many different bonds from some of the most established companies in Singapore and around the world.
Okay, let's crack open this case file. Now, the first thing any good detective looks for is the headline. That one big event that really defines the whole story. And in a financial report, that headline is always about performance.
Now, bond funds, they're usually the slow and steady part of your portfolio, right? They're not exactly known for putting up flashy, headline-grabbing numbers. But as we dig into the report for 2025, one number just absolutely leaps off the page. And there it is, a total return for the year of almost 50 million Singapore dollars. That is a massive gain. To put that into perspective, the year before, in 2024, the total return was around $35 million. So this isn't just a good year, it was a way better year. This, right here, is our story's inciting incident. But hold on, a big, splashy number is exciting, but a good detective never just takes a clue at face value. We need context. And for a fund like this, the most important question is, how well did it do its job of tracking its target? Did it actually keep up?
So the fund delivered a really impressive 8.27% return over the year. I mean, that's a fantastic result for this kind of investment. But here's where the story gets a little more interesting. Its benchmark, the very index it's supposed to perfectly mirror, did just a little bit better at 8.76%. So while investors were definitely happy, the fund didn't quite hit a perfect bullseye. And that small gap, that's a key detail we need to file away as we keep going.
So the next big question is the how and the why. I mean, where did this nearly $50 million return actually come from? What does that tell us about what was going on this year? This is where we look past the headline and start examining the real mechanics of the fund.
And the statement of total return pretty much gives us the smoking gun. Just look at these two numbers. The fund actually had a net loss from its operations of about $1.6 million. These are the day-to-day costs like management fees. But that loss was just completely swallowed up by one single item, a mind-blowing $51.2 million gain on the value of the bonds it was holding.
And this chart just lays it all out crystal clear. The fund didn't make its money from, being busy. It made money because the stuff it owned became way more valuable. This tells us it was just a fantastic year for the bond market itself. The underlying investment surged in price, and that is what delivered almost all of that massive $50 million return.
But as we dig deeper into this report, we find a whole second plot line running right alongside the investment performance. It's a story about confidence. Because while the bonds were doing great, something else was happening. Investors were just pouring money into this fund.
Just look at the total size of the fund, what they call its net assets. At the end of 2024, it was sitting at about $586 million. Okay, pretty big. But just 1 year later, that number had exploded to almost $783 million. That's a jump of nearly $200 million. We already know about $50 million of that from investment gains, but that still leaves a whole lot of money to account for.
And this is the money trail. This tells us exactly where it came from. So, new investors came in, putting in $218.5 million in fresh cash. At the same time, some other investors cashed out for about $48.5 million. You do the math, and what's the net result? A massive inflow of $170 million in new capital. This is a huge vote of confidence from the market. It shows investors loved what they were seeing and they wanted in.
Okay, so we've got a fund that's performing incredibly well and attracting a flood of new money. So the next logical question for our investigation is, What exactly are they buying with all that cash? What does the fund's shopping basket actually look like on the inside?
Well, a quick look at the portfolio breakdown shows a very, very clear strategy. Over 31% is in banking. Another 21% is in government-related bonds. Then you've got finance and insurance. You add that all up, and these stable, financially focused sectors make up the vast majority of the fund. This is a conservative, blue-chip strategy. It's not chasing high-risk bets. It's focused on the bedrock of the Singaporean economy.
And the geographic breakdown just hammers this point home. Almost 70% of the fund is invested in bonds issued right out of Singapore. Yeah, there's some international flavor, especially from Europe, but this is overwhelmingly a Singapore-centric fund. It's a really concentrated bet on the stability and success of Singaporean institutions, which totally explains why it's so appealing to local investors.
All right, we've examined the performance, we've analyzed the cash flows, and we've profiled the portfolio. It's time to step back, assemble all the clues, and ask, what is the final story this annual report is telling us?
The verdict is pretty clear. The 2025 financial year was a story of tremendous success, and it was really defined by two powerful forces. First, you had a great market that just pushed up the value of everything the fund owned, leading to that nearly $50 million gain. And second, you had a huge surge in investor confidence that brought in $170 million of new money. All of this was built on a deliberate, conservative strategy focused on Singapore's most stable industries. The only tiny footnote to the story is that it didn't quite keep up with its index, but it came very, very close in what was just a banner year for everyone involved.
You know, our whole investigation into this one document uncovered a really cool story about performance, confidence, and strategy. It just proves that behind every set of numbers, there's a narrative waiting to be discovered. You just need a little curiosity to crack the code. Thanks for joining this explainer.